The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to a beautiful Thursday, August the 16th, here in Clearwater, Florida, the headquarters of Technical Trading and Investing, TFNN.com, and just TFNN, too, if you listen on terrestrial broadcast radio. But it is a nice day. Today we celebrate Joe Miller's Joke Day. He was a big joke teller, and somebody put his book together out of all of his jokes that they sat around at the pub. Apparently he was Joey the Joke Man Miller. Anyway, slightly after his death, somebody, John Motley, actually put a book together called Joe Miller's Jest, and was actually the first book of humor ever published. That was early 1700s. Anyway, we celebrate Joe Miller's Joke Day as somebody that was able to laugh even in the horrible world of the 1700s, where everything was muddy and dirty, and an infection would probably kill you in a heartbeat. Other than that, we can have a good joke about it. But kind of interesting to think that humor has only come along here lately. I like watching stand-up comedians. They normally have a kind of the equivalent of today's court jester. They kind of try to challenge you. And today, or just even lately, it seems like every day you hear someone that's outraged about what some comedian actually said when it was just supposed to be a joke. Maybe it wasn't funny, but that seems like we're getting awful PC these days. I still think that the guy who did the duck for Aflac was a much better guy than we have now. But I don't know. I always liked that guy. Anyway, what do we got going on out in the marketplace today? Market is up. We're up at 1414, up 9 points on the S&P. It's going to be very interesting to see what happens on this day. We've got 1.7 million, almost 1.8 million shares, or 1.8 billion shares as we get into the day, and just extremely light volume. We'll have to see how this day closes out. I would not be surprised of seeing some kind of major movement. It is expiration tomorrow, but we'll have to keep an eye on that. Anyway, Cisco came out with earnings last night. We had a phone caller yesterday asking about a networking company. I don't see a whole lot in it. Cisco pretty much bounced on promises of a dividend. Dividend's not going to be all that much. It's going to be about 2%. But they were able to cut 6,000 people. They had to drastically drop their prices on their routers to compete with Lucent Alcatel, especially in Europe. I don't think that they'll ever be able to continue this kind of, quote, growth. But this pop, pretty much I look at is, let's see, make sure I haven't looked at their price in the last hour. But they were up a little less than $1 out here, $1.66, which is pretty good. $19 on a huge company like that, always pretty big. A lot of the driven part of the Qs and the tech side of the market out there. But I'm not buying a whole lot into this. I suspect that now that they have a dividend, a lot of companies, especially big funds, can afford to hold Cisco and at least get 2% out of their hold on a company that's been rather stuck in a trading range for a considerable part of the time. That they've had to start dropping their prices and going after Alcatel-Lucent makes me suspect that this is not going to last a great time. You can only fire people for so long and drop prices. They did not, get their margins up or anything like that. So I think it's probably a good time. I suspect that this is why funds will start getting into this over time. I suspect this thing, maybe after this bounce in a few weeks, probably going to start making its way down to 15 bucks. I just don't see a whole lot there in a huge company, and the next downturn is probably going to hit this company fairly hard, no matter if you get paid 2% or not. Good to see the Leno show Monday night. He likes to go through the headlines. I saw this, thought it was kind of interesting. There's a great ad, and if you're hopefully you're watching Tiger TV or in the den, but I'll read it for you here if you're just listening to the audio. And this was a great ad, a free seminar on drug stocks. I've been in the stock market for 17 years. I'm buying drug stocks, da-da-da-da-da. Criteria, H stocks, I'm buying Merck, da-da-da. SP, I'll be reviewed on something or other. Anyway, come and see my thing. And then a little square next to a picture of the guy, which his hair does not look real. Let me put it that way. Could be, just doesn't look real. It says a little square, my stock picking has turned 20 million into 4 million in 17 years. I don't think that's the exact kind of thing that you want to publish out there, but kind of an interesting ad, but one of the funny ones that Leno has in there. Of course, that's the oldest joke in the market. How do you make a small fortune in the stock market? Start with a large one. And here's where I'd go, bada boom, if I actually had a sound effects board, but I do not. But we're working on it. Found a nice chart of the biggest holdings of hedge funds. And if you look into the Tiger's Den or not, or the Channel 14 on Tiger TV, you'll see these later. But I was pretty shocked to see that as far as large caps in hedge funds, Sears Holdings is one of the highest percentage of these hedge funds holdings out there, which is owned 41% by hedge funds. This is always a good thing because, of course, they're the operators and manipulators ad nauseum these days. AutoNation is one that's got 40%. Charter Communications, kind of a dead one, 38%. Linden Basel Industries, don't even know them. I'm going to have to check them out. 32%. Global Liberty Global, 26%. Equinix, 24%. JCPenney, 21%. TripAdvisor's 21%. NetEase, 20%. Beam, 19%. And let's see, MU, I was kind of surprised to see that they were as low as 15%, but still kind of interesting. But that's the top 15 hedge owned stocks. Kind of interesting to know who is on the other side of that, and I'll bring up the reason why in just a minute. High Crush Partners was out today. Let's see if we got a price for them. HCLP. I brought them up. They are a company that makes materials and sand to shove down these fracking holes to force out the either the natural gas or the oil out of these fracked wells. They are out today. Let's see, low of 17, high of 1913. Looks like it's just under 19 as we speak. Everybody, unfortunately, was following a Kramer pump, and this is kind of the standard of the Kramer pumps out here. Let me see if I can get the CCR or CRR. Carbo Ceramics was his. They made little ceramic balls to shove down. Apparently, there's a shortage of both sand and these carbo ceramic balls. And in the heyday or beginning of Carbo Ceramics, they were able to jam this thing up fairly high. Of course, this thing hit a high of 181.34. And that was about the mid part of last year. And it's been pushed since then by Mr. Kramer. But I think he has a huge responsibility of getting this thing up to be blown out. Back down around $63 right now. Just to let you know how these boom and bust cycles in these kind of stocks work. But Carboceramics, not a whole lot of difference than this High Crush Partners, but looks like they think that they can do it again, and that's run a stock. Of course, we'll have to check this one out and see how it trades a little while, but still kind of interesting that we're going... the ceramic balls are actually forced down fracked wells to push out the oil on the other side. Okay, anyway, engineer was asking a question from the peanut gallery. Australian market volume, we've talked about market volume here being off rather significantly. It is not any different for both the European indexes, but I finally got a number on the Australian market volume today, and the average volume for the last 3 months is 34% off the comparable months from just last year. So we're pretty much off at least 30%, in some places as much as 50% around the globe on all equity markets. Not a good thing when you see these things at the top. No charges in MF Global. Of course, we're very familiar with MF Global around here because we had a guest that once worked for them. But MF Global, I guess the Securities and Exchange Commission and the Justice Department are letting it leak that they are not going to have any criminal charges, at least from them. As soon as that came out, there were several Illinois state law enforcement agencies that said that they thought that if the feds would not bring charges, that they would. The idea is that if you're a prosecutor, you only want to prosecute these big cases if you know you're going to win. And if you've got somebody with a couple $100 million to hire lawyers, probably not a bad deal. This does not mean that Corzine will be able to avoid civil lawsuits. And to that point, he's been selling everything in New Jersey and New York that he owns, several places. I think he had like a condo or something that was worth $15 million in New York, and a couple of 2 or 3 places in New Jersey. Normally, when these people are facing these kinds of coming lawsuits, and now they'll probably be able to sail ahead because the feds are out of it. A lot harder for the local and state people to keep civil lawsuits bottled up. But it looks like they're going to force ahead. But Corzine is preparing himself, most likely to end up in probably Florida or Nevada, which are probably the 2 states that it's the best to go bankrupt in. He'll probably try, normally in both those states you can put a lot of money in a few things and clear bankruptcy on lawsuits. And he's probably setting himself up for that for now. He'll buy a big house and pay probably cash for it down here, take the rest of the money. A lot of times the idea is to put it all in life insurance and get that money back after everything else is over. But lots of ways to avoid these, but it looks like he's setting that up right now. We will be back in just a minute. Give me a call, 877-927-6648.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And welcome back. You can give us a call at 877-927-6648. I want to introduce this segment as Dave White, and I'm biased. I don't know of anybody I've ever met that doesn't have biases from their upbringing, from their experiences in life. And if you say you're not biased, I don't believe you, or I think you're stupid. You've got to be one of the two. Everybody carries them, whether politically or in the market. Our jobs as stock traders are to recognize our biases and probably use technical analysis to try to get us over those biases if we can. The reason I brought this up is there's a lot of backbiting about Soledad O'Brien from CNN. I only vaguely know who she is, but a favorite target is somebody who's probably not down the center line of the political spectrum. The only thing I can say, though, is when people tell me that they're not biased, I know that they're either stupid or they just are, or they're just lying to themselves. Everybody has those biases, and as we carry them into the marketplace, whether we're bullish or bearish, we may have that bias because maybe the political winds are going our way, or we see 3 houses down the street be foreclosed on. It may be only anecdotal evidence that sways us. There's a lot of things. I've always recommended looking at the CIA manuals for analysis. They work pretty hard to make sure, in most cases, that they get redundant forms of information. They don't listen to what one spy or one informant tells them is happening in the KGB. They put a lot of data together to put a story and something that they can believe together. It's rarely that they listen to one spy. If a spy tells them one thing, then they get another spy to go check out what the first one told them, or get close to somebody that works at a building. If maybe that building's building I don't say submarines. Find out if the guy's working half days or full days. I mean, if they're really getting ready for a war, they're probably going to be working very hard. Actually, that's how they spotted the Cuban Missile crisis in 1962, was that every battery manufacturer for submarines was going 24 hours a day, and everybody wondered why they were getting ready with these batteries. And of course, they told them, and they had several people. I think it's out there in the public domain fairly well and documented about how they had all these people checking to see people coming and going, and took pictures of the employees and that they were working 10 hours a day. And, of course, that was a big no-no in Soviet Russia. Of course, they were trying to keep everybody employed and in the breadlines. But just a thought. Anytime someone says that they don't have a bias on a particular network or anything else, or in the market, I know I have biases, and it's my job as a trader to control them as much as possible. Ethanol pricing. Someone brought up the fact that ethanol is less expensive right now than gasoline. I wanted to bring up a few things, and that is the price does not include subsidies. Those subsidies were cut away, and everybody thinks that they don't exist. They were replaced, and they were replaced actually with a second line of subsidies, which said that 37% of all corn had to go into ethanol production. So, I mean, whether it's here or there, we are paying for it. If we're paying for it in the price of corn, the real price is not correct. Also, the price of ethanol is at the depot and does not include shipping to the location of choice. Ethanol does not go down any of the traditional pipelines and has to actually be shipped via train car. This is one of the reasons that old Mr. Buffett bought every train system up when everybody was pushing ethanol and making sure that either 10 or 15% of all gas had to be it. He was pretty sharp, figured it all out, and lobbied fairly heavily for the ethanol production because, quote, it was good for the farmers. What it was really good for all his huge bets on train cars, because all this ethanol has to be shipped in a train car, especially built train cars. They're huge. Actually, it's almost cost 20 times more to ship the ethanol to the refineries than it does to actually ship it, actual gasoline, down a pipeline. So the amount of money it actually costs is highly different, and doesn't really bring up the fact that we are all paying higher corn prices for that lower ethanol pricing. The legislation is known as Renewable Fuel Standards, RFS, and like I said, 37% of the crop has to be converted to ethanol. Of course, generates massive farm profits and keeps corn prices high. We just traded one devil for another. Anyway, we'll be back in just a minute. We'll start looking at some charts here in just a few minutes. Give me a call, 877-927-6648.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And as we come back, we finish out just a little bit about ethanol. Probably the thing that I didn't know when I went to research this a little bit last night was that ethanol has had some form of subsidy for over 30 years until they canceled it last year. But like I said, the RFS mandates 37% of the crop to be converted to ethanol. Kind of interesting. And there was a article out, probably going to take at least 2 years to see this, but I thought was very interesting. And basically, they found a way to carbonize lithium-ion batteries. And the big deal on this is it's always been a problem to rapidly charge lithium-ion batteries without blowing them up. This research paper from a college, I forgot where it was now. I have to get the article again. Maybe we'll talk about it tomorrow night on the Tech Insider Hour. Anyway, it charged the normal charging from about an hour on the batteries that they were using, which were fairly large, down to about 5 to 7 minutes. Probably a big issue if we ever get electric cars working fairly good. As a side note, in electric cars, the CEO of, what's the name of that car company? The big electric car company. What is that? They're making that S model. Anyway, he said that, I'll think of it in a minute, but I just happened to read just a little thing from it, didn't plan on it, but very interesting to see that he said that his company would probably be doing well or out of business in the next 6 months. Tesla, that's what it was. But they were interviewing him last night. What was it on? I think it was on public TV or something. He said that we're going through the hardest time, and that is whether we can make it through the next couple of iterations of our cars. But he said that in about 6 months they were either going to be broke or be really, really happy with what they were doing. Interesting. Anyway, Facebook lockup, of course, we talked about this about 3 weeks ago. I noticed that on CNBC last night, they actually had a countdown to the Facebook lockup, which is almost a little bit funny. I did do a little more research. 3 of the companies of the lockup coming out today have 90% of the lockup. What you have to know is that these are fairly large hedge funds, also Microsoft, some of these other companies. They aren't your average guy that's going to blow out the bottom of Facebook in one day. They're going to continue, and maybe even just waiting a couple of days until this brouhaha comes down. Everybody will go, oh, there was nothing. My idea is that the people, the weakest hands, are going to be the company employees. Those employees really get to start selling in October and November. What you're probably going to see here is very smart distribution in Facebook for a while. You might have, let's see, what is it, FB, to see how they were doing. I saw them down a little bit. Yeah, they're about $20. They're going to slowly over the next, they got about 60 days or so to really get and pump out as much of this as they can without hurting the stock price. And normally it's fairly easy. I always recommend reading A Reminiscence of a Stock Operator to see how they actually manipulated stock prices years ago. But it's fairly easy to buy in the morning. Very hard. I call it firing effect. A lot of people on the street do too. And that means making a lot of noise with your buying. Make it look like there's going to be huge buying all day long. You start off in the morning, you pump up the price of the stock, and then you sell into it slowly all day long. Buy fast, sell slow. Buy fast, sell slow. And you continue to do this. And a lot of times you have a willing accomplices and sometimes just useful idiots in the press that are willing to pump out anything that you say about your particular company. I've already seen a lot of the press articles hitting in the last day and even today about how Facebook is, the sky's the limit for it. Unfortunately, it had a huge problem at the beginning. I suspect that Facebook is probably going to find a price down in the $8 to $12 mark by the time that all the insider selling is over. And I think you can certainly wait until probably after the first year before I'd ever think of buying Facebook. They'd have to do something amazing that no one's thought of and that they haven't talked about. I suspect with the, I think, was it PE's like 30 and something for forward earnings compared to Apple at about 10 or 12 or something. I'm thinking that if it got down to Apple's rates, maybe not a bad deal, but that's about a third of the price that we have today. But don't expect these guys, which are probably pretty smart individuals, to go puking up all their shares at the beginning. One of the things I brought up is game theory used in the stock market. And if you wanted to check something out, this is a great example of the prisoner's dilemma. The prisoner's dilemma is the idea, kind of a mental game. If you dragged in 2 guys and you knew that they were guilty, but you didn't have enough evidence to prosecute them, you try to have one turn on the other. So let's say that if you had enough evidence, both of them would get, let's say, 10 years. what you would normally do is say, okay, prisoner 1, I'm going to give you 5 years if you roll on the other guy. And, you get 10 years for one guy and 5 years for the next. But, of course, if you don't get one of them to roll, you're not going to get either one of them in jail. And that's exactly where these guys are stuck. There are 3 guys there. If one of them starts selling, then the other one's going to have to start selling. So it ends up being one of those things where you noticed, I think if you were paying attention last week, I don't think I brought it up, but I think somebody did at TFNN, and that was that the CFO of Facebook was running around all over the place to these people that had these locked up shares, talking to them. And he was probably trying to blow some smoke up their rear ends a little bit. But I suspect that part of that was communicating that, yes, we will not rat on each other and have the stock plummet down. And there's really no reason for them to. They can, 60 days is not that long. They can certainly pump out a lot of shares over the next 60 days with positive press. And as long as they are easy about the way that they pump these into the market, if the market starts heading down precipitously, normally one will fold, and you've got the prisoner's dilemma. There's one willing to blow it out real quick, and by the other time the other guy gets wind of it, he's in jail for 10 years. Or in this case, probably selling for $5 less than the $20 Facebook's is in right now. The Fed Philly came out today, and there was no brotherly love. The Philadelphia Reserve Bank said its business activity index rose to minus 7.1 from a minus 12.9 in July, still shy of economists' expectation for just a minus 5. Of course, anything minus is not good, and no brotherly love from those Philly Fed boys. Zynga's throwing a lot of money around. Of course, they've been beaten like a redheaded stepchild after their IPO, but they are spending a lot of money, just like Facebook is, on trying to go after lobbyists to lobby basically gambling laws in the United States to drastically change. This would be one thing that made me think that Facebook might be bottoming out, but I suspect that at least we're going to have to get into a lame duck session before this would ever happen, and you're going to have to get awful close for this thing to pass before I'd be biting on either one of these Facebook or Zyngas based on them getting into online gambling. One of the I've been following the Apple regulation, or the Apple what am I thinking here, the patent lawsuits, and it continues to be rather interesting, and that is yesterday Roger Fiedler, who's the head of the digital publishing program at the University of Missouri, in his testimony he stated that he began work on a tablet design in 1981. And basically he's in a part of the university that was working on electronic publishing. He began basically also he'd done a lot of work, and Jobs had sent several people out in the mid-90s, about 96, 97, right when Jobs came back. I think that was 97. And he was looking at his prototypes. So the idea that Apple stole the iPad the design probably holds a lot of water. I still think that the judge is a nutbag because he said that just because it was in a science fiction movie, that wasn't prior art. And I can't find any case law, and actually talked to a couple of patent lawyers, and they said, yeah, pretty much if you've seen it in a movie, that's prior art, and that's been well settled. It looks like this guy's trying to maybe he knows enough that he thinks Samsung will win eventually anyway, and probably trying to make sure that there isn't a basis for an appeal. That would be the charitable version. The other version is he doesn't know his rear end from a hole in the ground. Anyway, we're going to look at some charts here. And let me get back up to those. We are seeing the market continue to move up, 1,417 on the S&P, continue to move up. We are just crossing 2 billion shares as we speak. This is options expiration. It's always time to expect the unexpected. And let's see, what do we have here? I wanted to look at some stocks that look like they were interesting and see how they've panned out here. Let me get a little bit better. Well, we're starting to see Home Builders Index try and break out, but this is what is so problematic. The XHB had its last high on May 2nd at $22.43, 12 million shares. And what do we got today? About 2.5 million shares. Big candle, no volume. VLO was another one that I thought was interesting. Not a whole lot of movement in it. It given a pretty good sell signal also. Valero Energy is VLO. The last particular high on this one was $28.68. 16 million shares on March 9th. We've gone above it and closed back below it. Up to $29.26 with 12 million shares. So about 4 million shares light. But still the volume roll-off here is very evident when you look at the last 20 days or so, and spectacularly in the last 12. You still see that nice move down. 5 million shares, 6 million shares today, looking like we probably should expect the unexpected soon in a lot of these stocks. In fact, a lot of these energy stocks are showing up rather interesting. USO was another one that we were interested in, and that was because of the expansions on it. This one is starting to set up right to its 50% retrace today. The USO is the United States Oil Fund. The energy so far off the bottom has been pitiful. You've got a 50% retracement in oil right now. I haven't looked at the contracts today, but I'll be very interested at the end of the day what the contracts look like on crude. Let's see what we have for a price for crude right now. And that is $95.55, up about 20 on crude today. As we look at that and see a perfect 50% retracement on this thing, could you get back up to a 618? There is just a gap up there on high volume down that would act as the next resistance level. So if it doesn't fail here, probably in the next day or so, probably 38 would be the best chance of getting the USO at the next top if you're thinking this thing is turning around. What else do we have? The shorts on the ProShares QQQ PSQ is another one. This has been banging around the bottoms out here with almost no volume. Again, it's breaking through today. The last major low on this was $25.27 on April 3rd. Not that long ago, 850,000 shares. We haven't had anything really approaching that over the last 7 days. It's 650,000 shares, 620, 40, 447,000 shares, 223,000 shares, 300,000 shares, 193,000 shares yesterday. Probably going to come in with about maybe less than 400,000 today. And when you compare that against the 850,000 shares just in April 3rd, you have to think that this is awful long in the tooth if we continue out here. So I'll be looking at this closely. Of course, on the S&P, anything over 1408 for a close would suggest only on chart patterns and not on volume that 1440 was in the cards, 1442. But man, with the volume at the levels it is, I still suspect this market could snap like a twig at any time. What else are we looking at? Office Depot. We've talked about this one for a while on, I think we talked about it on Tom's show for a while. Certainly looks like this thing is getting awful close to a bottom. Saw the last major low with high volume out here on October 4th, $1.75, 8.9 million shares. We've seen nothing like that again. 6.9 million shares, 3.7 million shares, 4.2 million shares, 2 million shares, 2.7, 4 million, and about 2 million a day. Maybe going out of business, but certainly not on a huge amount of volume. Office Depot, ODP.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
As we come back, somebody in the den pointed out TZA, so I'm going to point this one out too. Pretty good indication this thing's coming in for a landing on lighter volume. The big low out here that we're looking at is the March 27th low at $16.16, or excuse me, $16.60 on is it 22 million shares. Got into it with 19 million shares on July 5th, but did not get below it. Still 3 cents above it. We saw today that we're below it, about 15 million shares now. Chance of it getting probably 22 million shares pretty pretty light right now, so I'm going to have to say it's got a kind of a tough row to hoe to get to 22 million shares with 1 hour to go, but could it get 18? Yeah, could get something like that. So we'll continue watching that. Let's see what else out here. There were some other stocks that look to me like they're in very hard resistance levels. If this market does turn, one I'm looking at is JP Morgan. This thing came down on monstrous volume. We continue to watch this one closely on 511. Just monstrous 217 million shares down. It's come back into that gap. We've gone sideways now. 1, 2, 3, 4, 5, 6, 7, 8, 9 days. A couple of dojis in the last couple of days. And a decent size low. But I suspect this thing could get back into the $32 level without much problem. IVW, which is the S&P 500 Growth Index Fund. We're looking at two highs. The April 2nd high is the one I'm keying off of, $76.19, 1.1 million shares. We're up on about a little less than 500,000 shares right now as we try to break out on these levels. But the energy up and the energy down, not all that bad. Just no energy as we hit this high. You'd like to see a nice big candle, and you'd like to see some volume, of which we're seeing neither. On today, of course, it is expiration. Expect the unexpected. Ingersoll Rand is another one. It's actually coming into a long gap that's been around for, let me see how long here. It's been around for a while. Oh, there it is right there. We're back into this gap, which is, let me see if I can find it here. Came in on 16 million shares, a little more than that on 7/21. So what is that? June 21st of 2011. That gap has hung out here for a while as resistance levels. And we get back in here on just a little narrower time frame. Actually, you had a couple of them. But it had a high volume high on May 9th at 13 million shares. We're getting back into that, and today, fairly ridiculous volume of 1.5, 1.6 million shares so far today. Let's say the thing ends up with 2 million shares in the day. You're still going to be comparing that against the last high of 13 million shares and that giant gap down. A lot of these stocks looking awful long in the tooth here for a low volume day to be up here. What else do we have? Harris Corporation. We've been watching this one on the show this week. Another one that looks like it's going to be weak. Been waiting for it to break out of the high. $45.79 on April 27th. 1 million shares. What are we getting into? $46.30 up at the high. Kind of pulling back a little bit. Certainly looks about 30% light right now with an hour to go. We'll say we're going to be 15% light at the end of the day. CSQ, which is the Total Return Fund, CSQ. I think that's some kind of radio call sign too. Like anybody listening, please respond. CSQ, I think that's what it is in Morse code. I'll think about it. Anyway, take a look at that one. Another one up there, half the volume on it. We will be back tomorrow. Of course, expiration is tomorrow. Expect the unexpected. Not a lot of volume today, and a lot of puts put on and taken off this week. We should be seeing probably some excitement tomorrow that we normally don't see on expiration. Anyway, have a safe and wonderful evening.